Hi, my name's Glenn Hasselman. I'm just making this video for the users of free accounting software to show you guys how to account for inventory in free accounting software. This is the third video in the series, and if you haven't seen the first two, you probably need to go and watch those ones. So in the first two videos, Wendy was just running a business buying and selling lemons. She buys the lemons from Zed the farmer. So in this video, Wendy decides that she could make better money by selling bottles of lemonade. She researches how to make lemonade and finds out that she will need sugar and bottles as well as the lemons. Knowing the importance of record keeping, Wendy decides to use free accounting software to record the manufacturer of the bottles of lemonade. I guess if you watch the first two videos, this is probably the plot twist that everyone saw coming, and the purpose of this example is to demonstrate how to record the manufacture of inventory within free accounting software. So this is just exactly how I left off from the second video, but we'll need to create some new accounts for these new things. So at the moment we've got inventory dash box of lemons, which is our only item of inventory, but we'll need sugar and we'll need bottles. So let's do this. Inventory sugar, it's an asset, it's true. So I think it'll be generally be a GC free purchase. Now in relation to the stock, it'll be accounted for on a first in first out basis, and the GST code for the journals relating to that is GST not applicable. Okay, so save that. Okay, we'll need another new account called inventory bottles. In fact, they are the empty bottles. Also do these on a first in first out basis. This might be a taxable purchase by default. You can override that when you purchase the inventory. If for some reason you bought bottles which didn't have GST charged on them. Okay, and actually we need another new account for inventory, which is the actual bottles of lemonade. So let's set that up as well. Asset, we're not actually buying this, we're manufacturing it, so it's probably irrelevant to have a tax code there, but if you did, it would be a GC taxable purchase. It won't hurt to put it there anyway. Okay, now, having set up these four accounts, we can set up the calculation rules for when we manufacture inventory. So first let's start with the empty bottles and go to the calculation rules, add a new rule. Okay. Okay, so just giving it a name. Now, this calculation rule triggers when we make a bottle of lemonade. So we'll use this account, which is the final manufactured product, to trigger this rule. And we want to match the hours quantity of the match rule, and the multiplier should actually be -1. So when we make one bottle of lemonade, we lose one empty bottle. Apply separately to each day can just be no, and this transaction type, if creating a separate transaction, should be blank, and I'll show you why. Because we're creating a journal to record this. We're not entering one journal and having it create a separate journal. So this is all going to happen on the one journal, and I'll demonstrate that in a minute. Okay, save. Now, the next one. So we already have a couple calculation rules on this for when we actually sell these directly, but we can also add a new rule for when we use some in the manufacture of lemonade. So this is going to be triggered on that. I'm going to match the hours quantity of the rule, and I think that and in this hours quantity multiplier, you just want to put the portion off the box of lemons that is used to create a bottle of lemonade, and I'll just put 1/10 of the box, which I think might be a pretty strong flavor, but anyway. Apply separately to each day is no, and this last one is blank again. And save that. Now we've got the sugar. I guess so anyway, calculation rules, add a new rule, and again put this is triggered on bottles of lemonade, hours quantity of the match rule. Now I guess sugar might be something that you keep in inventory on a per kilogram basis, so we probably want to put and I don't really know much about actually making lemonade, but I think say 100 grams of sugar might be what they put into it. Separately to each day, and then again no. So save. Alright, so those are the 3 calculation rules to manufacture the bottle of lemonade. So what we've got to do now is we actually have to I guess buy some sugar and some bottles to have some stock. So going to the balance sheet, at the moment we've got some boxes of lemons, but we don't have any bottles or sugars, so let's go and do that. Cash payment, dated July. Okay, we didn't add a, let's just add a counterparty to make it separate to the other ones. Okay, so let's say she's just cash payment. It's just being purchased from the supermarket. Buy bottles and sugar. Okay. So say 10 bottles at $1.10 each. And we can buy the sugar on the same transaction, and say it's 10 kilograms of sugar, and I think I'll just make it $1.20. Okay, so now if we go to the balance sheet, we can see we've got some bottles and some sugar. Okay, so now here's the treat. So new transaction, doing all these journals in July, and in this case the counterparty actually, in the default ledger there's usually a counterparty called not applicable. This is not a transaction that occurs between your business and another entity, just recording the manufacturer of the inventory. So again, back into general journals, new transaction, been doing this example dated July, and we just want to pick the not applicable counterparty. Manufacture lemonade. Okay, so we select the account bottles of lemonade. Alright, so that's defaulted to GST taxable purchase because I set that on the it really should be not applicable. So I should I'll make a note about that in the video. And let's say we're just manufacturing one in the quantity. Just for the purpose of keeping it simple. So there's a button down the bottom here called Robot Calculate, and what this will do is it will go to those inventory items, and it'll check how much inventory we need to manufacture the one bottle. It'll calculate what is the cost based on a first in first out basis and put it here. So let's have a go. Alright, now I actually forgot to do something. So I've got the credits to the items of things that I'm using to manufacture that lemonade, but I haven't got the amount here, and that's because I forgot something. So let me just go and set that up. I won't save that journal, and that is so if you go to bottles of lemonade, calculation rules. So this is the product that we're manufacturing, and we haven't got any calculation rules. So I'm going to do a new calculation rule. Now, the reason for this calculation rule is so that the software knows which of these raw materials goes into producing this bottle of lemonade, although it will get all the values from the other calculation rule. So you can just select these items and then save. So you don't put anything over here. All you're doing is linking these raw materials to the manufacturer of this product. The other thing is I should have put calculation rule stage 1. So it being manufacturing, there is it can be different stages, so you could produce several different things and in sequence. In this case, we're just going from some raw materials to a finished product, and then we directly sell that. There could be even more stages to it. In fact, you do need to have that one there. Okay, so let's go and retry. Again, I should have that tax code. I should have defaulted to GST not applicable because this is not a purchase. So that's over there. Alright. Third time lucky. GST not applicable, manufacturing one item, and click robot calculate. Okay, so now what's happening here is we've got the system is calculated. This is the cost based on a first in first out basis of the bottle of lemonade that we've manufactured, and it's taking that cost out from these inventory items on a first in first out basis, and it's determining what quantity of various things it needs to manufacture that. So for the one bottle of lemonade, we'll need one empty bottle, so it's got the -1 to that. It's got the 100 grams of sugar over there, and it's got the 1/10 of a box of lemons there, and it's calculated based on a first in first out basis these amounts for the costs. This journal is not yet saved, so I could up this a bit. Let's say I wanted to make 3 bottles, and then I can hit the calculate button again, and it'll go and calculate. Alright, where is it? It seems to have reordered the lines in this transaction. Okay, so the inventory bottles of lemonade has somehow moved to the second place here. It's not important what order it's in. But yep, we've got the 3 bottles of lemonade there. We've used 3 times 1/10, so 3/10 of a box of lemons, 300 grams of sugar, and the 3 bottles. Okay, and so if that's correct, then you just go save. Okay, and we'll have a quick look at the balance sheet to see what it's done with these various inventory things. So I guess the first thing to note is that we have 3 bottles of lemonade at this cost, and the other thing is some of these other inventory items have been reduced. So let's have a look at what's going on with the bottles. We've got the initial purchase of 10 bottles and then the usage of 3 of them. And the software has allocated, again with, as in the other videos, these 3 against the first purchase. So when that, you can see that there's the reconciliation reference number 30 on both lines there. So when that is fully used up, this will be reconciled and hidden, and and then following purchase would be displayed and that kind of thing. So looking at the other accounts, boxes of lemons, so there's the 3/10. We'd already made a couple sales of these earlier, so that's allocated there. And the sugar, exactly the same as the bottles, except in this case we're using a portion of the initial purchase. Okay, so that's what you need to know about inventory. I guess one last tip is you need to be reviewing these quantities and amounts regularly. This is the kind of thing that if it's in fact you've got to review it every year when you do your tax return to make sure your stock balances are right. But the thing is that you have to keep this on track, and if something goes wrong, you have to investigate why that's going wrong, rather than just putting through months more of transactions building on top of an error. It's just the way it is within inventory. Okay, so that's pretty much it for inventory. I will do a couple other videos that that go into sort of some more detail about, I think, maybe things that can go wrong and other things, but that completes the main set of videos. But yeah, just to wrap up the story of Wendy, she realised her true calling and became an accountant, after which Zed had a bit of trouble selling lemons, but he recruited some working holiday makers, and Wendy helped him set up the payroll in free accounting software. With the time he saved, Zed implemented a new marketing plan. Ultimately it failed when a pandemic made it impossible to recruit workers. Being an innovator, Zed worked out how to make a biofuel from lemons and signed a contract with a Japanese company for the next 100 years of production, which made Zed a fortune but left Australians complaining about the price of lemons and electricity. Okay, I hope this video has been useful to you, and thank you for watching.